The US government shutdown just ended and suddenly 6 different HBAR ETF filings are sitting on the SEC's desk with approval odds hitting 80%. Coincidence? According to Gilmore Estates, institutional money is about to flood into Hedera hashgraph, and nobody's talking about it. We're looking at potential ETF approvals by the fourth quarter of 2025, HBAR's sitting at a critical technical breakout point, and one of Trump's top economic advisors just happens to own over $1 million in Coinbase stock. Something big is brewing. Welcome back to the channel. If you've been sleeping on HBAR while chasing the latest meme coin rug pull, this video might just save your portfolio. Make sure you smash that like button and subscribe because we're diving into ETF filings, government shutdowns, and why Hedera just became the most underrated altcoin play of 2025. Let's get into it. The crypto market just got its best news in weeks. Kevin Hassett, White House economic advisor and Trump ally, told CNBC that the so-called Schumer shutdown is officially getting canceled. For 3 weeks, U.S. politicians have been on vacation, while the crypto industry held its breath, waiting for ETF decisions that could unlock billions in institutional capital. Now they're heading back to work, and the timing couldn't be more perfect for HBAR. Hassett isn't just some random government bureaucrat. This guy owns over $1 million in Coinbase stock, so when he says politicians will resume negotiations in regular order, the crypto industry should pay attention. Translation: ETF approvals are back on the table, and major cap altcoins like Hedera Hashgraph are first in line. According to Gilmore Estates, HBAR is now listed in 6 different US ETF filings. That's not just 1 or 2 speculative applications, that's Grayscale, Canary Capital, Rex Osprey, and Crane Shares all betting on institutional adoption. Analysts are putting approval odds between 60 and 80% by the fourth quarter of 2025. In my expert opinion, when 4 major institutions file simultaneously, they're not doing it for fun. They've got insider confidence that regulatory winds are shifting. But before you mortgage your house and ape into HBAR, let's talk about what's actually happening on the charts, because right now, the price action tells a conflicting story, and smart money always watches what prices do, not what Twitter accounts promise. HBAR is currently printing a descending channel formation on the 3-day time frame. According to Profit Demon, a well-known crypto analyst, this pattern typically precedes a strong bullish wave. The midterm rally targets sit at 23 cents, 30 cents, 40 cents, and ultimately 60 cents. Sounds amazing, right? Except there's a catch. Hedera's native token is down 69.6% from its all-time high of 56.9 cents, which it hit back in September 2021. That's 4 years of bag holders praying for a comeback, 4 years of investors watching Bitcoin pump, while HBAR bleeds. So, when analysts start throwing around 60-cent price targets, I get skeptical. Not impossible, but we need to see actual momentum first. The Chaikin money flow indicator is showing a noticeable downtick, which signals that investor interest is fading. Fewer funds are moving into HBAR, and accumulation is slowing down. Translation: retail isn't buying the hype yet, and without retail FOMO, even the best technical patterns can fail. So, this growing caution, it's really making it tough for HBAR to keep up those short-term rallies, and honestly, that's exactly what we've seen over the past few weeks. Meanwhile, the MACD indicator, it's actually showing some early signs of improvement. The MACD line is getting pretty close to a potential crossover above the signal line, and well, that often signals a short-term price recovery. If this crossover actually confirms, we could see renewed buying activity. But until that really happens, we're kind of stuck in this no man's land between bearish exhaustion and, bullish hope. Right now at press time, HBAR is trading at 17 cents, which is just below that key resistance at 17.8 cents. These conflicting signals, they really point to an indecisive market. Short-term traders might look to accumulate near these levels. But, honestly, broader participation still remains pretty limited. In my opinion, this feels like the calm before the storm. Either HBAR breaks out violently, or it just collapses back to support and, well, everyone pretends they never believed in it. Now, let's talk about why HBAR might actually deserve the hype, because the fundamentals are quietly stacking up in ways most people aren't noticing. Sentiment recently highlighted the top crypto projects leading real-world asset development, and Hedera made the list alongside Chainlink, Avalanche, Stellar, and IOTA. This isn't some random influencer ranking. Sentiment is one of the most respected on-chain analytics firms in crypto. According to their research, Hedera just hosted the first tokenized oil fund, created by Zonix and One World Petroleum, converting oil assets into blockchain-based security tokens. That's not DeFi speculation, that's institutional-grade infrastructure. Here's where it gets interesting. Hedera's stablecoin supply jumped 54% to 138 million. When stablecoin supply increases on a blockchain, it typically signals incoming liquidity and growing network activity. Institutions don't park hundreds of millions in stablecoins for fun. They're preparing to deploy capital. Out of the 6 ETF filings, Canary Capital has already completed NASDAQ procedures, with fee structures and product tickers exposed. This means they're not just testing the waters, they're ready to launch the moment the SEC gives approval. In my expert opinion, when an ETF issuer completes exchange listings before approval, they're extremely confident about regulatory outcomes. If HBAR manages to breach the 17.8-cent resistance barrier, the next target sits at 20 cents. A 17.25% increase from current prices. Reclaiming this psychological threshold is vital for confirming sustained recovery. Breaking through 20 cents would also put HBAR back above major moving averages and trigger algorithmic buying from momentum traders. Conversely, if HBAR fails at 17.8 cents, the price could fall back to 16.2 cents support. A breakdown below that level might send the token toward 15.4 cents, which would, undermine the entire bullish thesis and confirm that investors are still losing faith despite the ETF narrative. In my expert opinion, HBAR sits in a unique position. It's not the most established like Chainlink, not the fastest growing like Avalanche, but it's the only one with 6 simultaneous ETF filings and a government shutdown ending at the perfect moment. Sometimes timing beats everything else in crypto. Look, I'm not telling you to blindly ape into HBAR because some analysts drew lines on a chart. What I am saying is that the confluence of events, government restart, multiple ETF filings, stablecoin supply increases, and institutional RWA adoption creates a setup we haven't seen for HBAR in 4 years. If you found this analysis valuable, make sure you check out my other videos. Drop a comment below with your HBAR price predictions for Q4 of 2025. I read every single one. And don't forget to smash that subscribe button because we're tracking every major development in the crypto markets daily. Thanks for watching, and I'll see you in the next video. This is not financial advice. Cryptocurrency investments carry significant risk, and you should never invest more than you can afford to lose. Always do your own research before making any investment decisions.